And welcome back. So, as we have discussed last time about the some topic of uh, trading investment, today I would like to take you with me along with my investing in a stock market strategy. And what do you need as a new trader? What do you need to know, of course, as a new trader? So, my agenda today is the value invest to talk about the type of investments and especially focusing on the value investing, fundamental analysis, technical analysis, risk management, and trading psychology. My three important points are the value investing, technical analysis, and trading psychology. I'm not going to go deep down in the other topics because due to the tightening in time. So let's start about the invest or type of investment in investings. We have growth investing, value investing, income investing, angel investing, and, venture capitals. Of course, each one of these has their own aspects, has their own features, has their own type of trading, and what is work for me might not work for you, and vice versa. I would like to talk about value investing because that is the topic that interests me most, and I would like to deep down into it. Um, Value investing is an investment strategy that involves buying stocks that appear underpriced relative to their uh, book value. So it is typically looks for stocks with low price to earnings ratio, low price to book ratio, and high dividend yields. These aspects, we are going to see them also in the fundamental analysis in a second. So the goal of value investing is to buy these undervalued stocks and hold them for long term until their true value is recognized by the market. This can result in significant gains for investors who are patient and disciplined. And also remember these two characters because we are going to revisit them in our trading psychology. So value investing strategies can vary, but common approaches include investing in companies with strong balance sheet, buying stocks when they are trading in a discount to their historical average, and investing in companies with a history of consistent earnings growth. So one of the biggest risks associated with value investing is the potential for value traps, where a stock is cheap for a reason and doesn't end up rebounding. Another reason could be that when the market may take a long time to recognize the value of a particular stock, which can result in extended periods of underperformance. And you are there knowing nothing what's going to happen. So we can say overall, value investing can be a powerful way to generate long-term returns, but it requires careful analysis and willingness to be patient in the face of short-time market fluctuations. These also could be very powerful for any kind of investing you want to do by having a careful plan or clear plan. So fundamental analysis is a method of determining security of business value. And the goal of it is to make you as a trader have a solid investment decision. We can look at different type of approach in fundamental analysis. And also don't forget that we have the quantitative and qualitative analysis. The qualitative analysis is looking at the it is looking at the developments in the sector and the company's leadership, which is the team, the department, and also competitors analysis. While the quantitative, that has to do with numbers, is looking at the financial statements and evaluating stocks. Stocks, what? Such as looking at ratios. Here I just have chosen some type of ratios that they are useful for the fundamental analysis, which is like profit, earnings per share, price to earnings ratio, price to book ratio, return on equities ratio, dividends paid. So all these aspects are important in order to have our decision makings in fundamental analysis. And please don't forget that each one has a powerful features, and they can be used to determine a very strong and solid companies where you can invest in. Moving on the technical analysis. Technical analysis is a method that is used for forecasting the future price, depending on the clear plan and analysis of the past market trades or trade lines. And based on the past analyzing of the market, we can determine or predict future price. Technical analysis has a million type of approaching, and each one works with different type of people. So what might works for me might not works for you, and so on and so forth. So there is not even one specific strategy that I'm gonna give, like this is how you have to go with it and this is how it's gonna be. No, each one has to find their own way. I'm going to spot a light on some aspects, which is the time frame that can be different from a day trader, that like scalping, we call it, that is like narrowed down for 15 minutes trade, month trader, week trader, seconds trader, you call it. Risk per trade and position size, entry and stop loss. So the risk here determine how much money I want to lose or I'm willing to lose out of my total capital. Then we have the trading direction, which is long to buy or short is to sell. The entry price is the price at which the trader can enter the market, and the exit price is which the price is where the trader can exit the market. And the stop loss price is the price at which the trader will exit the market if the trade goes against them. And we are going to see it on the chart that I have chosen on the Microsoft stocks. But take note of that stop loss price has nothing to do with your total capital at all. All right. So let's have a look at our, I would like to have Microsoft. First of all, to have a clear look, I would like to look at the past, as I said. So I'm going to have a look at the month time frame, and then I'm going to choose the 15 minutes to demonstrate clearly and to see some movements. So let's draw some line or a line of level on monthly candle. And this level, I think here is going to be a perfect level for me. Perfect. At 255. Huh? This level is important because it will allow me or us as a trader to draw our plan. If the candles are above the line, there is a big chance that price will go higher. So I already can see one candle is above the line. Let me go narrow down. So let's have a look for longs and start drawing longs. We see here candles. If I narrow down to look for my line, I can see the line already here. So you can see our candles are above this line. So I want to look at what was previous resistance, and I want to draw a resistance line. I think this would be the good one. And here we have an ascending triangle, which is breaking out to the upside. So we can see we have truly like we have the monthly level that was at 255. And if we stay above that line as we are now, like here, we haven't truly break down and there is potential to go up. So remember, resistance very often becomes support. And here what we can see, because of the strong rejection of the resistance line. And if I want to enter the trade right now with a target of what previously has been resistance, I could position my target, I would say somewhere around here. Why? Because if I have a look at what previously was resistance, I could have like one, two already, 3, 4, as you can see, 5 at 280. So positioning my target is the best to be at this point here. Perfect. Yes. So now looking at price action, if I have these high candles, I expect it to stop at previous high, which is here. Jesus Christ. Okay. Which I saw a strong rejection, as I told you, and it could be potential good entry for a long position. So I can say 3 here. And where could be my stop loss is if price goes back to the pattern below this resistance line is a sign of weakness. And I actually don't want and don't like to see that is gonna go lower than the support level. So I'm gonna put the my support level here as I want it to be. Okay. And this here where I'm going to put my stop loss. So taking a long position, as I said, my entry is going to be here, and then stop loss is on the support level right beneath that candles, and then my take profit is going to be right beneath my target position. So as a result, I have a clear trade plan where I can argue that there is a big potential that the price will go up. I have an invalidation plan because the pattern broke, and I hope to see the price go back to the pattern. If it does, I already have my stop loss, which is here at 0.46%, which is going to prevent me from a major loss. So having that all said, I have my enter price, I have my exiting price, my take profit, but this has a risk reward, a consequences of a risk reward ratio. So how to calculate the position size? I have a starting capital of $1,000. My risk per trade is at 3%, and that's what I want. Let's see. Risk amount is 30 euros, and that's what I'm willing to lose out of my total capital of the 1,000 euros. And then my position size is the risk amount divided by the percentage distance to the stop loss. So position size will be the $30 divided by 0.0046, if I am correct. Yes, let's calculate that. 30 divided by 0.0046 is 6,000 euros, 52 or 51, sorry, 0.73. Having this said, of course, risk amount or risk management is important. So that's why it's crucial to understand the market, and it's a part of trading strategy. So one way to manage risk is to determine the maximum amount of money you are willing to risk on a trade. And of course, you have to have a clear trading strategy, as I mentioned before, and understand the market and identify your risk tolerance. My last point is like trading psychology. Besides, or like being successful at trading and making profit is important in every trader's life. Besides considering risk management and technical analysis, we have to think of what is going on inside ourselves. Why do we behave in certain way? What is the base of our decision making? So the decision you make based on emotions, as it says here, like it is experience emotions such as fear, greed, and hope when trading. See, the decision, making decision based on emotion is way worse than the one you make based on a clear analysis with clear trade and idea plan. And to avoid these emotion fears, or also what we call FOMO, which is fear of missing out, all of us have it, you have to have a clear trading plan in place and stick to it. By setting realistic expectations and having a set of rules for entering and exiting a trade, and being disciplined in following those rules. This brings me to my conclusion. of invest your ideal money, remember the constant analyzing, know your risk profile, the power of the clear analysis, and the importance of making successful decision. And don't be scared as a new trader. You're gonna make it. Thank you so much.